Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, it's Monday. I love Mondays. Why? Because the stock market's back open. What's going on in the markets today? Well, we got the Dow down about 20 points. NASDAQ up about 80 points. Now, what's happening here? Well, the last 2 weeks, the NASDAQ has been down. You go, Mike, that's no big deal, just 2 weeks. Well, correct. It is no big deal, but it hasn't happened all year long. 2 weeks in a row that the NASDAQ's gone down. This is the first time it's happened for the whole year. Now, is this a turning point for the stock market? I do think it is. I actually think it is. Now, we're getting a little bit of a bounce today, a little bit of a bounce in the Qs, a little bit of bounce in the S&P. Now, the S&P came down to the 4150 level, and we're bouncing off that. The 4150 level is the 50-day moving average, which now acts as support. When you have a long run up like we've had, the first time you come down to the 50-day moving average, you usually get a bounce off of it. And that's what we're getting right now. And it may take 2 or 3 times to break through that 50-day. But once you break through the 50-day at 44.50, the next stop is the 200-day, which is down all the way at 4100. And I do think we're going to go in that direction. That's the direction the market is heading in now. We've had the top, and now we're coming back down. We'll see how low we get. This is just my take. Your take may be the complete opposite. All right, let's get over to the real estate markets. It always fascinates me. Over the weekend, they always come out with some really off-the-wall article. Let me read you the headline of the article. Unluckiest generation falters in boomer-dominated market for homes. Now, they're referring to the millennials as the unluckiest generation. Now, I want to go on record, I don't see the millennials as the unluckiest generations. We've had generations that have lived through world wars. We've had generations that lived through the Great Depression. I don't think the millennials are the unluckiest generation. I just don't see it that way. But now, if you don't start getting out there voting, vote these geezers out that are destroying our country, put your own people in, rebuild the country, you will see a world war and you will see a Great Depression. Things have got to change because that's the direction we're moving in. Now, that's not my topic for today. I got a little carried away. Right at the start, I got a little carried away. All right, so the article goes on to say that the boomers are dominating the market, right? They're pushing the millennials out. They're pushing the first-time home buyers out of the market, if you will. Now, if you're a first-time home buyer, you don't know how lucky you are to be pushed out of the market. But the article goes on to say the standard things like date the rate and marry the house. That's the stupidest thing you can ever say to someone. But that's what real estate agents are actually taught to say. Date the rate. They think that the rate's going to come back down. There is no guarantee of that. Now, nobody knows where interest rates on mortgages are going. Personally, I do have an opinion. I think they're going towards 10%. Now, a lot of people think they're coming back down to 3% again. I don't see it that way. I don't think that's what's going to happen. But nobody knows. I don't know. Do your own research. Listen to the people. Make your own decision. But anyways, the other thing that really gets to me is when agents say, if the rates drop down to 5%, home prices are going to skyrocket, so you better hurry up and buy now while they're only at, the rates are at 7% and prices of homes are still low. You got to get in. They're trying to push this FOMO on you. They're trying to push the belief that if you don't get in now, you'll never get a house because houses are going to skyrocket when rates go back to 5%. Now, I don't know if they're going back to 5%, but here's what I do know. If they do go back to 5%, houses are not going to skyrocket. It's going to surprise a lot of people. If they do go back to 5%, houses are going to drop. Why? Well, there's a reason they're going to be going back to 5%. It's going to be job losses. Job losses are why the Fed would be cutting the rates. And when people have job losses, people cannot afford to pay their mortgages, and those homes will be dumped onto the marketplace. So it's going to shock a lot of people. We may get rates back at 5%. I do not know. But when they do get back to 5%, houses are not going to skyrocket from here. They're not sustainable. Anytime you buy at the record high, which we're off about 5 or 10% from the record high, the high where Billy Bob got out at is that record. He sold at the top, still on vacation. But when you buy at this close to a record high, prices do not skyrocket. They may flatten out for years to come, but typically the houses drop. The houses come in. The house prices drop. So if they're telling you that, if you wait for rates to come down, houses are going to skyrocket, just run the other way from that realtor. That realtor just wants to make a commission off you. They look at you as the sucker that's going to jump in and buy this housing market to keep it propped up as long as they can. Now, a lot of the boomers, it is true, a lot of the boomers do pay cash when they buy a house because they sold their house and they had their house paid off because they've lived in it for 30 or 40 years already and their house is paid for, so they can take that cash and go buy one where you have to compete at a 7.5% interest rate. So that's a little bit of a problem. The other thing the article goes on to talk about is how real estate, how owning a home ownership is the key to building wealth. And if you look back through history, look at the boomers, They have the wealth because they bought homes. Well, that is correct. Now, the homes have made the boomers wealthy, but you got to understand. You see, the boomers, the rate was up here at 18%. It came all the way down to 3%. As the rate came down, the price of the homes went up, right? But right now, the price of homes are not going up. They're flatlining at best. But they're saying that there's a wealth effect. When you buy a house, you get wealthy. And if you look back, it'll tell you from 1980s, look at the boomers. Look at the boomers. They bought. They're rich. You're poor. Okay, that's what they're trying to tell you, that real estate, home ownership is the way to wealth. Well, let's look at people that have bought in the last couple years. If you take those people and you compare them to the people that's the same age that are renting, let's say you bought it when you're 28 and now you're 30, and the person that was renting when he's 28, now he's 30, whose wealth went up and whose wealth went down? Well, the guy that bought the house, his wealth is down because he put it all into the house. Now, at best, that house is flat, but if he wants to get out, he's looking at 7 or 8% to get out of the property. He doesn't have the wealth. Now, the guy that rent in my area, it's half price, and that's being very generous. It's really about a third of what you can buy a house for. You can rent a house for 1/3 the cost that you to purchase a house in my area. Now, I know most areas, maybe it's only 30% cheaper, maybe it's 50% cheaper. Like my area, it's about 70% cheaper to rent a house than it is to buy. So if you've been renting for the last couple years, you're the one that has more wealth. The owner, he's the one that's poor. He's house poor. And that's what you want to avoid. I want to teach you to avoid being house poor. Now, people think I hate real estate. That's the farthest thing from the truth. There's going to be great opportunities coming for you millennials to pick up houses, pennies on the dollar. Now, those are just around the corner. Who are you going to be picking up those houses from? You're going to be picking them up from the boomers. The boomers are retiring, and all their equity, their whole life savings is in the equity of the house, right? They're going to be dumping their house on the market. As the prices start to come down, those boomers are going to get scared and they're going to be dumping the houses and they're going to be chasing the market down. Now, they could get out here close to the price Billy Bob got out at, not quite where Billy Bob got out, but they're going to be the ones chasing the market down and dumping their houses as fast as they can for you millennials to pick it up. So do I think the millennial generation is the most unluckiest generation? No, I think the article is completely crazy. You can read about it on Yahoo Finance, I think is where I saw that article. But that guy's just, he's out there in left field. He doesn't know what he's doing. Now, how do I know that, prices of homes will come down? How do I know that? Well, one way I know that is because of the comments. People are very passionate. They're passionate. Now, I know I'm not popular, and I never started this channel to become popular. unpopular. But my opinion is that houses are going to come down by 40 to 50%. 40 to 50%, the house prices are going to drop from the levels that we're at now. Now you go, but Mike, that's not possible. I say it is possible. And now here's the thing. When I say that, people will jump in the comments, the moon boys, the haters, and they'll tell me what an idiot I am, that's completely impossible. They have a lot of passion, though. They have a lot of passion. Quit lying to the people. Mike, you don't know what you're talking about. Mike, you're a fool. They have passion. And that's how I know they're a little bit scared. They're a little bit scared because they just bought their house price up here. And they don't want to go down 40 or 50% because they're going to lose everything they put into it and probably a lot more. And they're frightened. So they have this passion. They have this passion that's going to go up. It's kind of like when Bitcoin was, trading up over 60,000, 69,000. One of my videos, I said that I thought Bitcoin's going to come down. I got the haters coming out. It was borderline death threats on Tall Mike. People hate when you say their stuff's going down because they were all convinced. They were the moon boys that, Bitcoin's going to $1 million. And they had this passion for it. It was their religion. That when you told them it was going to come down, they really hated you. Now, I'm not comparing real estate to Bitcoin. Not at all. Not at all. One is a real asset like real estate, and Bitcoin, well, I don't know. Bitcoin, it's a limited supply of nothing. That's what a Bitcoin is, a limited supply of nothing. Now, people think I hate Bitcoin. Farthest thing from the truth. I love trading Bitcoin. Bitcoin goes up and down, up and down. And right now, I think Bitcoin's going to go down again. I'm going to get the haters. Come on, haters. Leave me the comments, but I think it's going to go down again. That's just my take. Now, why do I think that? Because everybody's so passionate that it's going to go to 100,000, then $1 million. The passion is still in Bitcoin. And these people are passionate. Watch the comments. They'll leave them for me. But I think Bitcoin's going to probably get chopped in half from here again. It's about 30,000. I think it could come back down to 15,000 very easily. Could go a lot lower. Yes, maybe it goes to 100,000. And I trade it. I'm in and out of it. I have no problem with Bitcoin. I don't hate it. It's a good trading vehicle. It's something to bet on, if you will. But back to housing. I got carried away. Sometimes I just get carried away, especially on a Monday. But anyways, you don't want to talk to your friends and family about this stuff. They will you won't have any friends and your family will disown you. But the reason I think that prices are going to go down by 50% is because we are in what's known as a full-blown financial crisis. Right now, we are in a full-blown financial crisis, Great Depression style. We've had 3 or 4 of the biggest banks already drop out, right? That's about 10% of banks went down. And now you got a lot more of these bank mergers, right? Okay, for example, I had 2 banks. Now I have 1 bank. I had Union Bank and I had US Bank, and they got merged together, right? They got merged together. And I know it was because Union Bank was in trouble, so US Bank had to come and take them over. Now, Union Bank probably would have gone down. But now US Bank, after it merged, it's in jeopardy of going down also. It just got downgraded by Moody's. The banking system is on the verge of a major collapse, a major failure. You're going to see a lot of these bank mergers. They're not going to be called takeovers. They're not going to be called failed banks. They're going to be called mergers. Now, here's how the merger works. The government calls up U.S. Bank. And they say, you take over Union Bank. And the U.S. Bank goes, we don't want Union Bank. They're in trouble. No, you're taking over Union Bank, and you're doing it this weekend. We're on Friday. We're making the announcement. By Monday, you'll have them back open again. And we will cover any loss. Me and you, the taxpayers. We will cover any loss. And so this financial crisis, you're going to see a lot of this going on, but it's not a failed bank then if it's taken over by somebody. And JP Morgan, they take over a lot of banks, right? A lot of banks in Silicon Valley. I think that JP Morgan took it over. I think they're forced to take it over. Anyways, the government takes all the bad assets. They get all the good assets, and we guarantee them, the taxpayer, no losses. It's a great little game plan, but you're going to see this, and we're in a major financial collapse right now. Now, this is, once again, is just my take. Don't talk to your friends and family about this. They will start hating on you. But at the same time as we're in this financial crisis, we have the consumer that's breaking. The consumer is flat broke and he's starting to break. Now, why is he starting to break? Well, okay, now just from 2020 to where we are now, 2023, the cost of living due to inflation, due to taxes, the typical household is paying about 10% more right now. Just in that short period of time, everything costs at least 10% more. So it's costing them 10% more to live. Now, credit cards now have passed that $1 trillion mark. Those are up from 14% up to 21, 22%. So that's a big problem for the consumer. The student loans, 1.8 trillion. I mean, we're going to hit $2 trillion really soon on student loans, and they got to start paying those again. So that's a problem, right? Okay, now emergency funds, right? Emergency funds. People have no money. What are they doing? They're going into their 401k and they're pulling out all their money. They're pulling it out because it's an emergency. They announce emergency. So that's up 36%. Look at the consumer is broke. Now, vehicle repair costs. Vehicle repair costs up 20%. 20%. And the repos. People can't make their car payment. They can't afford to fix the car. So it's just giving it back to the bank. And once again, that's putting more stress on the banks. We're repoing 15, 20,000 of these cars a day. I mean, it's just crazy. It's just crazy. We got 69% of consumers living paycheck to paycheck. That's up from 61% just at the start of the year. Now we're at 69%. Look at the consumer is breaking. We're in a full-fledged financial crisis. But don't you worry about your house. No, sirree. It's going to stay up there. You're going to get that price Billy Bob got. Don't sell until you get the price Billy Bob got, because Billy Bob got out at the top. And Billy Bob's a happy camper, and you can still get close to it, but pretty soon you're going to be circling the drain, lower and lower. This wealth effect, it's a reverse wealth effect in real estate. Home ownership used to be the American dream. Take my word for it, it's becoming the American nightmare right now. If you're a first-time home buyer and you're priced out, count your lucky stars. That is the best thing that can happen to you right now. You will get your opportunity. I think end of this year, beginning of next year, you're going to start to see these falling like dominoes. That's my take. I'm Tall Mike. You probably got a different take. Go ahead and leave me a comment if you're a hater. Leave me a comment if you love me. Why not? Get out there, everybody. Have a great Monday. We'll talk again real soon. Hit the subscribe button. Bye-bye now.